The UK housing market, a spring awakening. February's figures from Nationwide, the UK's largest building society, paint a picture of a housing market stirring from its recent slumber. The average house price experienced a modest but noticeable 0.4% increase, climbing to £270,493. This marks a significant uptick from the previous month's 0.1% rise, signaling a potential shift in momentum after a period of relative stagnation between mid-2023 and spring 2024. While this growth is encouraging, it's crucial to contextualize these figures within the broader economic landscape. The current 0.4% monthly increase, while positive, falls considerably short of the double-digit growth witnessed in 2022, the peak of the pandemic-fueled housing boom. That period saw unprecedented demand, driven by a confluence of factors including low interest rates, government support schemes, and a shift in lifestyle preferences brought about by widespread lockdowns. The current market, however, operates within a different reality. Nationwide's early release of its House Price Index provides a valuable preview of broader market trends, preceding similar reports from Halifax and the Land Registry. This timely data allows for a quicker understanding of the evolving dynamics within the UK housing sector, giving both buyers and sellers a valuable insight into current market sentiment. Analyzing these early indicators enables more informed decision-making, whether it involves navigating the complexities of purchasing a property or strategizing for optimal selling opportunities. The recent upward trend in house prices is likely influenced by a number of intertwined factors. One significant element is the gradual easing of macroeconomic pressures. While inflation remains a concern, signs of moderation in price increases suggest a potential lessening of the strain on household budgets. This could contribute to increased consumer confidence and a renewed willingness to engage in property transactions. Furthermore, underlying supply and demand dynamics continue to play a crucial role. The UK housing market has long been characterized by a persistent shortage of available properties, particularly in desirable areas. This ongoing imbalance continues to exert upward pressure on prices, even in the context of a cooling broader economy. However, looming changes to stamp duty are set to significantly impact the market's trajectory. The temporary cuts introduced by the previous government are set to expire on April 1st, ushering in a new era of taxation for home buyers in England and Northern Ireland. This will undoubtedly influence buying decisions, with potential consequences for both market activity and pricing. The changes are substantial. For first-time buyers, the threshold for stamp duty exemption will decrease from £425,000 to £300,000, a considerable reduction. Similarly, the threshold for the reduced rate will drop from £625,000 to £500,000. For all buyers, the zero-tax threshold will be halved, from £250,000 to £125,000. These adjustments are expected to impact buyer behavior, potentially cooling the market in higher price brackets while possibly stimulating activity in lower price ranges. Scotland and Wales, with their distinct taxation systems, will experience different effects, further emphasizing the regional nuances within the UK housing market. The impact of these changes remains to be seen. Economists and market analysts are closely watching the coming months to gauge the full extent of their influence. The confluence of factors, subtle price increases, shifts in government policy, and the persistent imbalance between supply and demand creates a complex and dynamic environment, making accurate predictions challenging. Beyond the immediate impact of stamp duty changes, broader economic trends will undoubtedly continue to shape the UK housing market. Interest rate movements, inflation rates, and overall consumer confidence will all play significant roles in determining future price trajectories. The housing market, therefore, serves as a sensitive barometer of the overall economic health of the nation. The popularity of Nationwide's index highlights the importance of reliable and timely market data. Its consistent ranking amongst the UK's most visited websites, trailing only major news outlets and government resources, underscores the public's keen interest in understanding the current state and future prospects of the housing market. This widespread interest reinforces the vital role that real estate plays in the lives of millions of Britons. The ongoing evolution of this market demands close attention from all stakeholders. The coming months will be critical in determining whether February's modest increase signifies a genuine market recovery or a temporary blip in an otherwise complex and evolving landscape. The narrative of the UK housing market remains unwritten, but one thing is certain. The coming chapters promise to be filled with compelling developments.